The filing trap, where people either lose money or get a letter. Understanding the overtime deduction is only half the battle. The other half is claiming it correctly. And this is where things quietly go wrong for a lot of people. Not because they're careless, but because the system assumes a level of knowledge most taxpayers don't have. The IRS doesn't reach out and say, "Hey, we noticed you worked overtime. Want your deduction?" You have to know where to look. You have to know what number to enter. And you have to know what not to enter. Miss any of that, and one of two things happens. You leave money on the table, or you claim too much and hear from the IRS later. Neither is fun. Why your W-2 is misleading, even when it's accurate. Let's start with the document everyone relies on, your W-2. Your W-2 shows total wages, total taxes withheld. What it doesn't reliably show is overtime hours, the premium portion of overtime. How much of your pay qualifies for the deduction? Most employers don't break that out cleanly. They just report total income. So if you see a line that says, overtime pay, $12,000, that number is useless by itself for tax purposes. The IRS doesn't care about overtime pay. They care about overtime premium. And those are not the same thing. The midnight calculator problem. Here's what ends up happening in real life. Someone opens TurboTax or H&R Block at night. They start answering questions. The software asks, "Did you receive overtime pay?" They say yes. It asks for a number. They type in the big number from their pay stub. And just like that, the calculation is wrong. Why? Because the software doesn't know. Your regular hourly rate. Your overtime rate. How many overtime hours you worked. It only knows what you tell it. If you don't manually calculate the premium portion, the software can't magically infer it. How you actually calculate the right number. This is the unglamorous part, but it's the most important. You need three numbers. Your regular hourly rate. Your overtime hourly rate. Your overtime hours. If your pay stub shows overtime hours, great. If it doesn't, you reverse engineer them. Here's how. Take your total overtime pay for the year. Divide it by your overtime hourly rate. That gives you total overtime hours. Then, subtract your regular rate from your overtime rate. Multiply that premium by the hours. That final number is your deduction amount, not your refund. Your deduction. Why most people don't do this? Because it's annoying. It requires looking up old pay stubs, doing multi-step math, understanding why the big number is wrong. Most people stop at step one. They assume the software will handle it. Sometimes it does. Sometimes it doesn't. And when it doesn't, you don't find out until months later when a letter arrives. The IRS letter nobody wants. Here's the pattern tax preparers see every year. Someone overclaims the deduction. The return goes through. They get a slightly larger refund. 6 months later, a letter arrives. The IRS says, "We reviewed your return. Your deduction was incorrect. Now you owe the difference, plus interest, sometimes penalties. It's not catastrophic, but it's stressful. And the worst part? You were probably just trying to claim what you were told you deserved." The nurse example that breaks people. Let me give you a real-world scenario that hits hard. A nurse works in a chronically understaffed hospital. Her base rate is $38 per hour. Her overtime rate is $57 per hour. She works 220 overtime hours in 2025. On paper, 220 times $57 equals $12,540 in overtime pay. That's the number she sees all year. But the premium is $57 minus $38 equals $19 per hour. $19 times 220 equals $4,180. That's her deduction. She's in the 22% bracket. So her actual federal tax savings, $4,180 times 22%, is almost equal to $920. She was expecting over $12,000. She got under $1,000. Nothing illegal happened. Nothing was stolen. But emotionally, it felt brutal. Why this feels worse than losing money? Here's the psychological kicker. If she had never heard no taxes on overtime, $920 would have felt like a nice bonus. But because she spent an entire year believing she was earning tax-free money, The final number felt like a betrayal. The pain isn't the math. It's the revision of reality. The planning mistake people don't talk about. A lot of people didn't just expect a refund. They planned around it. They took on payments, delayed decisions, justified exhaustion, all based on money that never actually existed. That's why this matters. Not for politics, not for outrage, but because bad assumptions lead to bad life decisions. What the software will not tell you. Tax software is good at math. It's bad at context. It won't say, hey, that number seems wrong. It will just calculate based on what you entered. And if you don't understand the rule, you won't realize the mistake. The core problem, summed up, people didn't misunderstand a detail. They misunderstood the mechanism. They thought, overtime equals tax-free money. Reality is, overtime premium equals deductible income, subject to brackets and phase-outs. Those are two completely different financial experiences. What comes next? In the next section, we're going to zoom out and talk about why this keeps happening, not just with overtime, but with tax credits, stimulus programs, student loan policies, retirement incentives. Because this wasn't a one-off failure. It's a pattern. And once you see the pattern, you stop falling for headlines. Why this keeps happening and why it will happen again. By now, the math should be clear. The overtime deduction exists. It works, but it works very differently from what most people believed. So the obvious question is, how did so many smart, hardworking people get this wrong at the same time? The answer isn't stupidity. It isn't laziness. It's human behavior colliding with political incentives. Headlines are designed to be remembered, not understood. Nobody passes a bill and announces it like this. We've implemented a marginal tax deduction on the premium portion of overtime wages, subject to income phase-outs and withholding mechanics. That doesn't win elections. It doesn't trend. It doesn't fit on a banner. So instead, people hear, no taxes on overtime. That phrase isn't technically true, but it's emotionally true enough to stick. And once something sticks in your head, your brain stops asking questions. Your brain filled in the gaps automatically. When people heard that headline, their mind did three things instantly. Assumed all overtime pay was affected. Assumed the benefit was dollar for dollar. Assumed it would show up automatically. None of those assumptions were correct. But once your brain commits to a mental model, it defends it aggressively. That's why people didn't double-check. That's why they didn't read the bill. That's why they worked extra hours without verifying the payoff. Optimism is the most expensive bias in finance. Optimism feels good, but it's deadly when it replaces verification. People don't overwork because they hate their lives. They overwork because they believe there's a clear reward at the end. In 2025, that reward felt guaranteed. And once someone locks onto a number, I'm getting $15,000 back. That number becomes part of their future identity. Taking it away hurts more than never having it at all. The expectation gap is where pain lies. Let me be very clear about something important. Most people who worked overtime in 2025 did make more money. They weren't worse off, but the emotional damage came from the gap between what they expected and what actually happened. That gap creates anger. That anger gets aimed at the system. And suddenly, a reasonable policy gets labeled a scam. Not because it failed, but because it was misunderstood. This is not an overtime problem. This exact pattern shows up everywhere in personal finance. This tax credit will save you thousands. This deduction will change your life. This program makes X free. Then the fine print appears. Then people feel cheated. Not because the benefit vanished, but because the benefit was never what they imagined. Why people don't read the fine print. People love to say, well, they should have read the bill. That's not realistic. The tax code is unreadable by design. It's dense, technical, and fragmented. The system runs on intermediaries, accountants, software, summaries, headlines. So when the summary is misleading, the misunderstanding spreads instantly. The IRS did explain it quietly. Here's the ironic part. The IRS actually published detailed explanations. Worksheets, examples, phase-out tables. They exist, but they're buried in dense PDFs that nobody reads unless they're already confused. By the time someone looks them up, the overtime is already worked. Why this hit blue-collar workers hardest? This misunderstanding disproportionately affected people who are paid hourly, don't itemize deductions, don't have tax advisors, don't think in marginal rates. These are the same people most likely to believe the headline, trust the system, assume fairness. So when reality shows up with a smaller number, it feels personal. The tragedy isn't the money, it's the trade-off. The most painful part of all this isn't the refund amount. It's the trade-offs people made to earn it. Missed birthdays, extra stress, worn-down bodies. When someone believes they traded those things for $20,000 and gets $2,000 instead, their brain screams, that wasn't worth it, even if mathematically it still was. This is why financial literacy is about framing. Knowing how money works isn't about memorizing rules. It's about understanding how systems frame incentives. If you don't understand the frame, you misjudge effort, you misjudge reward, you make emotional decisions. The overtime deduction wasn't designed to motivate extreme work. It was designed to slightly improve after-tax pay. But the framing made people think it was something else entirely. Why this will happen again? Here's the uncomfortable prediction. There will be another bill, another promise, another simple headline, and most people will do the same thing. Believe it, act on it, be surprised later. Not because they're dumb, but because complex systems plus simple messaging always produce confusion. The real lesson so far. The lesson isn't, don't work overtime. The lesson is, never make financial decisions based on a headline. Headlines create emotion. Math creates clarity. And clarity almost always arrives too late, unless you slow down. What's next? In the final section, we're going to bring this home. We'll summarize the correct way to calculate your benefit, show how to avoid this trap in the future, and talk about how to think differently about money going forward. This is where everything gets tied together. How to calculate it, how to think about it, and what to do next. Let's bring this all the way back to where we started. You worked overtime in 2025. You heard it was tax-free. You're now realizing the refund you imagined is probably much larger than the refund you'll actually receive. Not because something went wrong, but because expectations and reality were never aligned. So let's fix that. Step 1. Stop thinking in pay, start thinking in premium. The first rule going forward is simple. Overtime pay is not the number that matters. The only number that matters is the premium portion. Here's the formula you should permanently tattoo into your brain. Overtime rate minus regular rate times overtime hours equals deductible amount. Nothing else counts. Not the total overtime pay. Not what your W-2 highlights. Not the number your coworker brags about. Just the premium. Step 2. Convert the deduction into reality. Once you have your deduction, you still aren't done. You now need to translate it into actual money. To do that, multiply the deduction by your marginal tax rate. Rough rule of thumb. 12% bracket, about 12 cents per dollar. 22% bracket, about 22 cents per dollar. 24% bracket, about 24 cents per dollar. That result is your real federal tax savings. Not what you're owed. Not free money. Just reduced taxes. Step 3. Check the income phase out. If you made over $150,000 single, $300,000 married, you're not getting the full deduction. Calculate the phase out before you file so you don't get blindsided. The formula is annoying, but it matters. Income minus threshold divided by phase out range times max deduction equals loss deduction. Subtract that from your maximum. Then apply your tax rate. Yes, it's tedious. Yes, it's worth it. Step 4. File like a human, not a headline. When you sit down with tax software, do not blindly enter your overtime total. Do not assume the software knows your rates. Do not skip the worksheet. If your pay stubs don't show overtime hours, reverse engineer them. If you're unsure, ask a preparer one focused question. How do I calculate the premium portion of my overtime for the deduction? If they hesitate, find a different preparer. The bigger lesson nobody talks about. Here's the truth most finance channels avoid. Most financial pain comes from expectations, not outcomes. People don't go broke because they can't do math. They go broke because they trust simplified stories in complex systems. The overtime deduction is a perfect case study. It's real, it's helpful, but it's modest. And modest benefits should never drive extreme life decisions. How to avoid this trap in the future. Anytime you hear a financial promise that sounds simple, ask 3 questions. Is this a credit or a deduction? Does it apply to all income or a specific portion? Are there income limits or phase-outs? If you can't answer those 3, you don't understand the benefit yet. Pause before acting. Why this actually makes you smarter than most people. Most people will feel disappointed, complain, blame the system, and move on without updating their mental model. If you understand what just happened, you're already ahead. You won't work extra hours for imaginary money. You won't plan purchases around assumptions. You won't get emotionally hijacked by headlines. That alone is worth more than most tax deductions. The final reframe. You didn't get scammed. You learned something expensive without losing actual money. You learned that tax benefits are rarely absolute. Policy language is designed to persuade, not educate. And real financial advantage comes from reading past the headline. That lesson will pay you back far more than this deduction ever could. Final thought. Overtime didn't become tax-free. It became slightly more tax-efficient. That's still a win, as long as you understand it. Do the math. Set realistic expectations. And never confuse political marketing with financial reality. Because the people who win with money aren't the ones who work the hardest. They're the ones who understand the rules before they play the game.